Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so 68 points, 69 points on the Nifty. It's coming back strongly at this point in time. Ashwani Gujral is with us. Ashwani, good morning. Good to have you here. So your assessment of the rally, and is this a break now? Is the break now confirmed for much higher levels?
See, it's definitely showing follow through, which is very different from what was happening for last 2 months. So I guess the break is confirmed, and we should see higher levels from here. My sense would be that new highs will be difficult, but at least a retest of previous highs should not be out of question, because large stocks are leading this rally. So that way, if you are long, continue to remain long, and carrying positions will probably work a bit better than what was happening in the last few days, where every day was a new day. Okay. Having said that, financials are leading the market move, and that often gives the market a lot of strength. But the interesting thing since yesterday is that all sectors seem to be in the green today. Just pharma is in the red. So that way, it's fairly broad-based. So for the moment, I think a lot of corporate-facing banks, maybe because there are shorts there, they are tending to come back. So State Bank is a buy with a stop of 260, target of 275. BOB is a buy with a stop of 118, target of 126. And Axis Bank is a buy with a stop of 530, target of 545.
Okay. Ashwani, the fact that we could probably retest our all-time highs, is it indicative of the fact that maybe we could see a more sustainable pullback for mid-caps as well?
Definitely. You see, a lot of stocks will not make new highs or touch their previous highs, but quality mid caps, chances are will most likely get back even above their previous highs. So a lot of differentiation will happen. It will not be like 2017 where everything starts to run up. So this time you have to be a bit more careful, because quality is responding much better in this rally than cats and dogs.
Okay, so mid-cap IT was a big one yesterday, right? And today is no different. Mastech, you look at KPIT, Mindtree, Aptech. So there is action here. It's not as large as yesterday, but maybe building on. Tech Mahindra, HCL Tech, Emphasis, all in the 2.5% region. What's the best bet here, Ashwani?
See, IT bottomed out much before the market. So in this leg of the move, IT will participate with great amounts of gusto. So Mindtree, NIT Tech, Tata Elxsi, all of these stocks, and in case TCS comes out with good commentary, I think IT is likely to run amok, because a lot of good news will start to get priced in even before the results come out then. So IT is at a key point. It's consolidated for last month and a half, and from here, like what happened with the Hexaware yesterday, that could happen with other mid-cap IT stocks as well.
Okay, Hexaware is down 4% as we speak, currently at around 492 rupees. So a lot of that rally yesterday being sold into now. But Ashwani, a couple of queries now. Selva has 1,000 shares of Bharat Forge at 550. Wants to know the view on the stock.
See, the good news here is that 600 is a stop, so you shouldn't be losing money on this. It can move to the higher end of the range, which is 780, 800. So that way, it is still a trade. So catching stocks at the lower end of the range and riding right up to the higher end, that often works well. So my sense is this is a fairly decent hold.
Ashwani, thank you very much. We speak again in an hour. Appreciate your time here, as always. 60 points on the Nifty, 10,918 is where we're at. Let's quickly put up mid-caps and small-cap indices. The mid-cap index is up 0.7. The small-cap index was up almost 1.4%. Yeah, so actually small caps had been doing better, but I think there is a bit of a drop-off which has happened on both. Not much, but a little bit.
1,920 for the Nifty. We have the Bank Nifty, which is up around 0.6%, and the marginal outperformance coming in for the mid-cap, so up around 0.7% currently for the mid-cap index. T.S. Anand Krishnan of Varanium Capital Advisors joins in to discuss the fundamentals of the market. Hi, Anand. Thanks very much for joining in. Well, it seems as though we're closing in on fresh all-time highs, or at least retesting the all-time highs for the Nifty. In such a situation, how would you position your portfolio?
So, I mean, from our perspective, the way we have structured our portfolio is essentially, there are two parts to the portfolio. The first part being where you have consistency of earnings, where we have earnings growth visibility as well as good ROEs. EBITDA margins are quite stable. Valuations may be tad on the expensive side. So you have the sectors like the consumption sectors, auto, retail, FMCG, consumer discretionary. That comes as part of the first piece of the puzzle. The second piece is really where we are looking at IT and pharma more on the export side, given the rupee depreciation as well as given a turnaround that we are seeing both on technology as well as pharma, which is where we are positioning the portfolio. The third portion where we are still waiting to see green shoots emerge is essentially on the infra space. There are a few select plays that you can look at, but broadly our portfolio is constructed on the first two themes, which is basically consumption, retail, private banks, and the export sector, which is IT and pharma.
Anant, IT is mid-cap IT is mostly?
Yeah, mid-cap IT as well as large cap. So we do like an Infosys and a TCS.
Because, yeah, I mean, exactly that point. Only those are the two companies where growth in 19 is going to be more than 18.
Correct.
I mean, the other large cap all will be actually lower. The rate of growth will be lower in 19 versus 18.
So, I mean, obviously, this is at the point of a turnaround because both these companies have invested specifically in the digital space. We are hoping, you know, the BFSI segment.
But you bought them a few months back, right?
We bought them.
Basically, it's a holding.
It's a holding.
You're not buying now.
No, we're not buying anything new. Yeah. In the mid cap, we have a few names like a Take Solutions, which is a kind of a play both on pharma as well as on life sciences as well as technology. So
you categorize that as IT or a pharma company?
It's a combination. It is a technology company. So they help in the analytics as far as life sciences is concerned. So those are the places that we are looking at.
Okay. Anant, you know, you mentioned earnings season this time, but a lot of the companies are going to see good numbers simply because of the low base impact. So are you waiting it out for this earnings season to see what the sustainability of the recovery would be, probably going into, say, the whole entire first half of FY19? Or are you convinced with this quarter's numbers, or will you be convinced? So
the numbers on a comparative basis, on a year-on-year basis, would look good because they are coming off a GST and a destocking phenomena which happened the previous quarter last year. I mean, as I said, as far as the consumption themes, the retail themes are concerned, they would clock anywhere between 25% to 30% depending upon the company that you're looking at. On autos, auto ancillaries will clock more than 30%. If you look at technology and pharma, select pharma, you would see clocking anywhere around 20 to 22%. Global cyclicals, which have done extremely well, so the likes of Tata Steel and JSW, should, given the firmness in the price, should do well as far as this quarter is concerned. But given the concerns that we have on trade wars, given what we are seeing from pressures which are building up from macro standpoint, we're not sure whether global cyclicals will stick. And the last piece being the infrastructure play as far as India is concerned. They're the likes of L&T, which are showing some signs of new orders and growth, but many of the other select infra players are not doing well. EPC players barring, who have started to show good numbers.
But many of these consumption stocks are already at fresh highs. They're already highly valued. How much of a good earnings season or recovery is already factored in? Would you recommend incrementally buying these stocks?
So absolutely, you're absolutely correct. There is no scope for a PE expansion. You've had the likes of Bajaj Finance, or the likes of GCPL, which have done extremely well. The issue really is in terms of whether there will be surprises on the downside, therefore the PE de-rating will happen. But assuming that they are producing the earnings in the the range of 25 to 30%, effectively you will see them grow at the same earnings clip without a PE rating. Because in this part of the market, that's the only piece where you're seeing consistency of earnings, which is very difficult to predict in the other parts, whether you'd be look at the PSU side, the infrastructure side. So if you have to look at a portfolio play, you have to be invested, though, as I mentioned, they may be expensive, but they're still hitting their numbers.
Any thoughts on these NBFCs, the brokers who became pretty large, diversified, like Edelweiss and IIFL and Motilal? They've all come off quite significantly. Motilal the most. Correct.
I mean, Motilal has come off quite a bit, but that's mainly because of issues surrounding their Aspire and home finance business. But I believe that the other parts of the business, both on the broking side, I mean, brokerages are having their best quarter ever, as well as their asset management business is doing extremely well. So this is an opportunity, given the fall that we have seen, which is north of 55–60% from the top. So I think it's an opportunity specifically in Motilal. Edelweiss is obviously a play that has done extremely well.
It's only 20% off the high.
Correct. So
the big one is Motilal.
It's Motilal. So we do like Motilal at this price.
Just a quick point. Take Solutions, which you mentioned earlier. I mean, have you been? Because it's up 50–55% this year.
We've been holding it for more than a year now.
So you're not new incremental buys as a stock? So
incrementally, we've not bought anything recently.
And how do you value this, something like this? I mean, where does it trade at? What is it? What's the peer comparison here? So
essentially, it's global in nature. I mean, you don't really have a specific India play. So you're looking at a company which is likely to grow north of 20-odd%. Available to you at around 14 to 15 times multiple. We see huge opportunities in the life sciences space, especially given the analytics that they provide. So that's the and the ROEs have started to improve. If you look at the last 4 quarters, consistently the ROEs have started to improve in their case.
Okay, Anand, before we let you go, there's actually some news on Tata Motors. It's been one of the biggest underperformers of this year. What's your sense? Do you think that now that the trade tariff situation is probably receding a little bit, temporarily at least, it might be a good time to look at Tata Motors?
It has been a great value buy for the last 2.5, 3 years. I mean, if you look at the Tata Motors, from a valuation standpoint, it's always been a story which is compelling. And if you actually look at the Tata Motors DVR, which is trading at a 35% discount, is even more compelling. But we've never seen that bridge between the Tata Motors and Tata Motors DVR converge. And the valuation is more geared towards how sales happen both in the US and China, which is where the bulk of the issues we are facing as far as trade is concerned. So we will still hold off till we start seeing stabilization from that quarter.
Okay, all right, Anand, we're going to leave it on that note. Thanks very much for joining in. Like we've been pointing out, a lot of what we're seeing on the screen today and as well as for the entire week has been due to the kind of global strength we are witnessing. The US markets have recovered, Asia's on an uptrend. It seems as though maybe the headwinds could be easing, with Wall Street rallying overnight and shrugging off all of those trade war concerns. Prashant's been doing some statistical work and putting everything together and is providing some data points with regards to the global setup. Then, Prashant, over to you.
Oh, yeah. I mean, the last 1 month, it was headwind after headwind. It was negative news flow kind of getting into a spiral. And now it seems like there is a break to that spiral. I mean, the bad news flow, negative news flow seems to have paused. Just putting it together in terms of what has changed at the margin. Markets always pay attention to the incremental news flow. And things rarely change or rather turn around completely as a whole, but incrementally they do change. So there has been unexpected calm, right? I mean, we saw shots were fired, the tariffs were imposed late last week, and we expected to hear a lot from both sides, US and China, over the weekend or this week. Well, so far nothing. Absolute calm. US yields have started retracing, I mean, both in real terms and nominal terms. So the attractiveness vis-a-vis emerging markets has actually gone down. I mean, if you are looking to put money in the US. Chinese slower growth was a big one. I mean, the market in China seems to have adjusted to it. Just look at what the Chinese equity indices are doing after sharp corrections, or even for that matter, the yuan is doing. Oil prices, I mean, there is, some who believe that they won't go much higher. They're not actually broken out and gone to a completely different orbit. And the momentum in dollar is also starting to ease, and that is always good news for emerging markets. I mean, you can look at as far as the DXY is concerned, a basket of currencies. So is the worst really behind? The most amount of negative news flow as far as global equity indices were concerned were centered around Asian markets. US was relatively better. US was not breaking down or anything of that or that matter, but the fact is US markets were stalling and they were threatening to break down. That has also not happened. So, I mean, from east to west, it looks like things have all starting to come together, and maybe we are putting some of the bad news flow behind us now. How is it all of this sort of showing up on equity indices? Let's just begin with the biggest one in the world, S&P 500. Well, there was these are all technicals, but it does show up in prices. Double bottom neckline at about 2,802. It's back in sight. I mean, prices were stalling. It was looking like this level would not be taken out, but it's now back in focus. This, by the way, was also the high which was made in March of 2018. Nasdaq 100, it looks to be in an overall uptrend. Basically, you go back and look at charts of 2012, 15, 16, consolidation pattern before it starts to break out. The Japanese index, again, a big one in this part of the world, it's closed yesterday above the double top neckline, invalidating the earlier break lower. It had actually broken below that neckline. It's kind of sort of, as of yesterday's close, come back above it. And the last one, the Hang Seng, it's also rebounded off important support levels. 28,100 is an important support. It did break that intraday, but it's again sort of bounced off in a meaningful way. So, I mean, you look at the Indian screen and you wonder what has changed. Well, at least when you sort of expand the horizon, look at what's happening globally. At the margin, incremental news flow seems to be getting better. It's showing up in prices. Ekta.
Okay, all right, Prashant. Thanks very much for that. Well, we do have Richard Harris with us to talk about the global market setup. But before that, I just want to point out that is the IRDA member who's talking to CNBC TV18. And this is one of the first reactions which has actually come in from the IRDA post that nod that they've given with regards to LIC buying majority stake in IDBI Bank. So that is important. And just keep those sort of comments on your radar. Richard Harris, he's with us now. Richard, hi, over to you. So what do you think? Trade tariff concerns have now been put to rest and we can all move on?
Well, the markets never really were pricing in a trade war anyway. We had markets down, maybe 2-3% in the second quarter as a result of trade tariff worries, but they were never really convinced. And markets were recovering. And basically, if you look at the pattern of this year, as I think Prashant was just saying, you've got this news flow coming in, but underlying, you've got the fact that the global economies are really quite strong. So in February, we had an inflation tantrum. So we had a very weak first quarter. Second quarter was quite strong, although people didn't really realize it because there was so much news coming out on a day-by-day basis with trade, but the markets didn't really react to it. And now we're coming up into a period, just starting the third quarter, and it's funny how these things go in quarters, where the third quarter started quite strong, but it's reacting to the strength of the underlying economies. It seems that news flow at the moment is not strong enough to really knock that off its pedestal.
Okay, Richard, so this point about this trade war thing, right? The point is the next time we are going to hear something on this issue officially, I think, is in August, right? When we hit some of the stated, officially stated timelines. So you got this gap basically where markets can, in a way, breathe a sigh of relief. Of course, unless, of course, we're hit by rogue tweets, etc. So is that just taking a breather kind of situation right now, and it's not as if something has necessarily changed? Those concerns haven't really gone away.
No, that's right. And we still don't really know what impact the trade war is going to have, except that it hasn't really impacted markets so far. Now, okay, there's some talk that Teslas have gone up 20% or something in China. But Tesla is a fairly small impact, really, if you're talking about that. So there will be pockets of businesses, pockets of industries that will complain and will yell like mad. But by the same token, there will be broad areas of industry that won't really worry about it. And if you think of some of the major global companies around the world, they will just move their centers of production, they'll move their cash flows, and really there will be a great deal of mitigation, I think, in terms of the trade issue. But from time to time, we will have certain industries, we will have certain companies that come up with a bad news story about tariffs, because that's going to happen. On the other hand, there are some good news stories about tariffs. For instance, if more income accrues to the state, then that's got to be a good thing in these days of high public deficits.
Richard, just wanted your thoughts on Brent crude. It seems as though, you know, we're in this range of, say, 75, say up to $80 per barrel. 80 being, you know, the high that we hit in 2018. So do you think that that could probably be the range that we could see for the next couple of months? What's your sense?
Well, I think it's still very much dependent on how the Saudis feel. And it looks as if they feel that anything over 80 is going to be too high for world growth. And probably anything below 70, they may start to close the gaps a bit. Don't forget, we've also got the shale pumpers. So one of the reasons behind OPEC wanting to keep a certain amount of a cap on the oil price is because they don't want the shale pumpers to come in and start producing. So I think that OPEC is following this very closely. Saudi Arabia brought in almost yet another unilateral increase in production to keep oil prices down. So I think that 80 is looking at a reasonable cap. But it doesn't mean to say it may not spike up from time to time. But the worries, of course, by OPEC is that other suppliers are going to come in and start getting a foothold.
From the broader markets, a lot of these beaten down stocks are also seeing some amount of momentum. Say something like a Dilip Bilcon, which has lost around 17% year to date, is up around 5% today. And something like a Reliance Naval Engineering, which has lost over 70% year to date, is seeing around a 5% uptake at this point in time. But other stocks also doing quite well. So something like a Shriram Transport is up around 5%. And a couple of others, such as InfoEdge, is gaining as well, so up around 4.6%. So definitely quite a lot of diversity in terms of the type of stocks which are gaining, and it is sector agnostic at this point. In terms of the Nifty, Bajaj Auto is your top gainer, up around 3% and Hindalco following suit, so up around 2.5%. Reliance Industries doing well today, up around 2.2%. HCL Tech and TCS also.